It's you know, when people are saying, hey, I got to buy some gold, we get that email. It's, hey,
or
you know
the
what?
market's going down, going down, going down. Hey, how do I short the market?
Right.
I mean, you'll see the same thing.
Or how to trade a bear
Tell me
market.
about short selling.
Right.
And you know, it's okay, time to cover my
Time to
shorts.
cover.
It's
It's going to go the other way.
That's
It's
just the way
it works.
The market works. Yeah.
Unfortunately, you know, and the game is built for that. The game is built to take money from, just as a casino game. It is built to take money from the guy who doesn't understand the rules of the game.
Right.
And the rules of the game are very
And
perverse.
that's a great thing to think about if you're thinking about getting involved in the markets on any time frame. Is I think that one of the best quotes that I've ever heard is this guy goes to, you know, a trader goes to work every day knowing that there are millions of skilled traders out there trying to take his money out of his pocket. And so if you're going to go try and compete with those guys, you got to realize that there's a whole bunch of guys just like you, maybe probably more talented, trying to take your money.
Yeah, more talented, more resources, more computers, and more algorithms, and more computers with programs that are trading. You know, 70% of the volume right now in any of the financial markets are run by quantitative methods, anyways.
Absolutely, yeah.
So,
But it's counterintuitive on so many levels, and then that's why behavioral finance is such a huge part of the markets now. You know, hopefully trying to grasp what it is that people are trying to think about and profit from it.
It's an interesting game for sure. Absolutely. That's about all the time we have. When we come back, we're going to bring our fantasy finance topics back and review some of our calls from past shows and see how we did.
With growing inflation and the declining dollar, where do the pros and the smart money park their investments? They turn to hard tangible assets such as gold, silver, and rare coins to fight inflation. At Mount High Coins, we've helped people fight inflation for over 20 years. With gold and silver at an all-time high and rare coins seeing steady growth, now is the time to make a move buying or selling. Turn your old rings, silver flatware, coins, or collectibles into cash in your pocket. Stop by or give us a call at 1-866-THE-COIN. Mount High Coins, just south of the underpass on 3rd Street.
No matter what's happening in the market, financial experts agree. Reduce risk by diversifying your investment portfolio. Stocks, bonds, and mutual funds alone are not enough. Foreign currency, or Forex, can provide the security you need.
Sheltered from local market turmoil, Forex exploits global market opportunities. It is incredibly liquid in the largest financial market in the world.
Learn more about Forex from an authority, Aspen Trading Group. Our managed accounts have a solid, proven track record. Call or visit our website to learn more.
Welcome back to the Trading Desk. Our final segment today is Fantasy Finance, where we typically give you our thoughts and predictions on some various picks and various asset classes. But what we're going to do today, though, is review some of the previous ones we've done, the good ones and the bad ones, and probably give you a few new ones as well. So
I don't have any new ones. I think it's a function of being in this gray area. I don't have any ideas, you know. I mean,
I think that's okay.
It's a choppy. Well, you know, this is kind of a, to me, this is kind of a sell, a straddle market. You know, sell at the market calls and puts, and just wait for us to go nowhere.
Or sit on your hands.
Now, what is that? Let's explain that. What does it mean to sell calls and puts?
You're selling. You're basically neutral to market. You're basically betting that we're not going to go up or down. And I think as we come into the summer months, we may go a little up, a little down, but at the end of the month, we're probably going to be right about where we are. So I'm betting that I'm going to sell the premium because there's usually a higher premium for a call, betting that the market's going to go higher. So I'm selling against the market going higher, and I'm going to sell a put, which is betting that the market will go higher, and I'm betting that both those things won't happen, and we'll end up in a confluence.
And whoever buys those options from you pays you a premium.
Yeah.
And if those
I'm betting that those options are going to expire worthless.
And you're going to collect all the premium.
And I would look at individual names or the market in general to possibly do something like that in this type of market. And you can collect money on both sides of the market and you don't have to guess the direction.
Well, if you bought Ford, like you said, to hang on to from the last show,
let's talk about that a little bit.
You made some good money, and you don't need to trade this much.
Right, true. Let's talk about that. We talked about a pairs trade that we put on a few months back where we were shorting Toyota Motors and buying Ford against it. We were buying in what I felt was an overhyped
It comes totally back
market.
to the psychology.
Psychology, you know, Toyota cars are great. Everybody respects that, but the stock had a huge run, and we're coming into a soft consumer environment.
Loved it. Everybody hated Ford, and Ford was just
down here, just dying. Nobody's even looking at it.
Yeah.
So you sell one versus the other manufacturer, and you had to move.
I think
Toyota went down before, and then you had Ford over the last go up 60%.
Yeah.
In a month since we last spoke about it. We said keep the Ford on, take off the Toyota. So you made it on both sides of the trade, which is the perfect scenario. It doesn't always work out that way.
Except for you, Matt.
I was lucky. I was lucky. I've also been wrong. Nectar. Don't forget Nectar.
Yeah,
it happens. I took a 40–50% haircut on that.
It happens.
So. Yeah. But that's a biotech, you can.
Well, I've been wrong on the dollar. It's a long-term call for me, but I've been wrong. I've been saying the dollar's going to rally. It has rallied some the last month, and I still think it's a long-term call. But my timing wasn't exactly right.
Yeah, it's been kind of a dead money for the most part.
But I mean, I recommended the financials at the beginning of the year, the Citigroup, the Moody's, the XLF, and all those have popped back up off their lows. So.
Yeah. And just playing against the overall crowd psychology.
Exactly.
When it got to that point,
everybody hates financials. That's when it's time to buy them.
Exactly.
Yeah.
And the same thing with the euro. I talked about the euro versus the British pound.
Yep.
Everybody wanted to be long the euro. It touched 160, and then it's gone straight down ever since. And I said that the European central bank's probably way behind the curve with interest rate cuts. They haven't cut yet, but the market's pricing it in. British pound
anticipating.
It's
that discounting mechanism again. It's
well, you look at the housing industry. We've talked about the housing industry. Although the actual housing prices are dropping, the publicly traded housing stocks are up 40 to 50%. They're probably the best performing, one of the best performing stock classes for the year.
I think Centex saw its cancellation rate improve to the best in 12 months. I mean, so things are starting to look a little bit better at the home builders. Yeah. The market's been pricing that in for months.
The moves happen. We're not suggesting people come in and buy them now.
Right.
It was so hated before. That was probably the time.
Well, that's the email I got about XLF too, and it was a month after I recommended it. It had already gone up 10–15%. That's what I kind of wrote back to the viewers that, hey, this aired a month ago, and you're not getting the same prices today, so it's not quite as attractive. So, but
I still actually own XLF in my stuff.
Oh yeah,
because I think over in the long run it's going to be a good one. But we've already had that nice initial pop. Now we've got house money to play with.
Sure.
I've got a big cushion.
Yeah.
And it's a good thing.
So do you protect yourself in that when you have that house money? Do you take some off? Do you sell it and buy some calls with some of that money? That way you're still
roll your stop up.
I would do that in my trading account, but this is in my IRA. Just going to let it go. I mean, I have a stop in place that protects profits in the event that.
No, and I think I don't know where the market's going to go in the short term, but I do think most of the big financials are oversold still undervalued. So I think you can probably own the XLF for a long time. So.
Well, you know what? We've got to wrap it up until next month, but I want to thank you for tuning in this evening. This is the Trading Desk on COTV. Have a good evening.